One, it's important to be closely held. Management and directors' interests directly tied to those of shareholders. So it's very, very important to have a large insider holding. You need to be debt-free. You need to have a great asset, and that asset needs to be secure. You need to be operating in a jurisdiction that is friendly and supportive of the mining industry. And then, of course, you need to have supportive shareholders.
Thank you, Mark and Simon from Tembo Gold, for taking Arne's and my questions. Now, my question for you guys is, how should an investor go about investing in gold and also gold exploration companies? Because historically, gold has been quite cyclical, and investors might be tempted to try to make use of that, not necessarily time the market, but try to make use of that. Is that a good strategy, or is it more a buy and hold strategy?
Well, I mean, I think everything in investing is about timing and cycles, as you say. And if you want to get exposure to gold, you're somebody who believes that gold is money. And really, as JP Morgan famously said, gold is money and everything else is credit. And we are seeing an explosion of credit in today's world. And gold is sane money. Gold is rational money. And if you want to have exposure, you need a spectrum of exposure. So I wouldn't advise anybody to go put all of their money in junior gold mining companies because, that would be far too risky. But in order to have returns that are going to, outperform ETFs and indexes, you essentially need some exposure to junior gold miners, because the ones that are structured properly, run properly, have great assets, have no debt, they effectively perform like out-of-the-money call options, where as gold goes high, the performance of that junior gold miner is going to be significantly more than, say, a Barrick or a Newmont, in the same price move in gold.
And Simon, could you just outline that a bit in terms of net present value? Is that directly impacted then by the gold price, that if the gold price goes up by 10% on a more long-term trend, your net present value also goes up 10%? Or am I drawing the wrong correlation here?
I think that net present values for juniors would go up significantly more than the move in gold. I mean, to give you an example, here we are today with gold, around 1940, 1950. If gold was to go to 3,000, I mean, that's a nice, sort of 50% return on your money. But the average junior would probably be up 10-fold or 20-fold, or in some cases 100-fold, because it would be a completely new paradigm for investors. It would be a new, complete reevaluation of the sector. And when you look at how underexposed pension funds, mutual funds, and individuals are to gold, there would essentially be a rush, and there just isn't enough companies to satisfy all the demand that would come.
Yeah, Simon, quick follow-up question on this topic. How does one go about picking the correct exploration companies to invest in? What factors should an investor look for?
Well, I mean, it's funny you ask that question, because we think about that a lot. We think about what is it that would make Tembo an attractive investment for an investor? And we believe there are a number of boxes that need to be checked for a junior to be a great candidate for investment. One, it's important to be closely held. It's important to have management and directors' interests directly tied to those of shareholders. So it's very, very important to have a large insider holding. You need to be debt-free, because debt can be very punishing when timing isn't exactly what one envisions. You need to have a great asset, and that asset needs to be secure. You need to be operating in a jurisdiction that is friendly and supportive of the mining industry. And then, of course, you need to have supportive shareholders.